Good evening, traders. Let's begin our today's session. We are at week 9 today. Wow, week 9 weeks, 9 weeks and counting. Let's see what we've covered during all these weeks. We've covered various strategies ranging from long and short moving averages, crossovers, scalping strategy. Then we've covered triple super trend directional day trading strategy. We've covered the Bollinger Band, double VWAP, candles along with order flow, alligator strategy, and directional strategy. We've covered rank delta, Bollinger Band, CPR, Renko, and of course, we've covered the best practices in trading. We've covered a lot, guys, and I really hope and wish that you people are putting in your efforts to practice, practice, and practice, and then redefine your own system. Believe me, guys, Mr. Jagan is putting in a lot of effort to get the group for the group. I've seen him on calls even at 11 and 12 at night, and he's up early in the morning. You've seen the messages in the group, right? From your end, guys, you just need to reciprocate. Those who are really serious will reciprocate likewise, and they'll make most of what is being shared in the group. Let's get going with today's session. But before we start, very important reminder: like always, you need to fill up the Google form to get access to the YouTube channel, and don't forget to like and share the channel. The more you like and share, the more Google will understand that they've got to push it further to help benefit more people like us. So, guys, it's just not like and share. You also need to go to the channel and see there's loads of stuff that is being put up on the YouTube channel. I don't know how many of you all are going there. I will within 2 hours we cannot cover much here, but the kind of videos that have been shared there will cover various topics like mean reversion, secret use of stop loss order, trading a close relative strength index. The topics covered there are, I just cannot define all the topics. Pin bar trading strategy how it works. So you've got to go and visit the YouTube channel, guys. Let's get started with today's session. We've got Sanadeep who's going to be presenting first. Sanadeep, are you ready with your screen? Sanadeep?
Yes, I'm ready.
If you could just share your screen, please.
Sure, I'll do that.
Sanadeep,
let me know if you're able to see the screen.
Sanadeep, 1 second, just hold on, please. Yes, we can.
Okay.
Yeah, people, Sanadeep here needs no introduction. He's the pinch hitter of the group over here. Covers most of the day's range. If you see, 600 points, 700 points, 400 points. He is the pinch hitter. So Sanadeep now, Sandeep, over to you.
Sure. Okay. Am I audible enough? Is it clear?
Audible enough, Sandeep.
Okay. Hello, everyone. Good evening. I hope everyone is doing good, well, and having a great weekend. So today my topic is volume-based trading. So this has been, pending for a very long time. Jagan sir and I have been trying to, create this strategy and, come up with a strategy which can help everyone in terms of, taking volume as the, strategy. Because till now we have covered, most of the super trend based and, other strategies, EMA, moving average based and all those, but we have not covered specifically on the volume, and volume plays a very important role. We all know without volume market doesn't move fast, right? So when the volume comes, then we know that serious players are there and they want to take market in a particular direction. So that's why volume-based trading is an important topic, and I hope you'll understand it and you'll start practicing it, which can help you in terms of your trading. Now, in terms of agenda, we are going to talk about what is volume profile, how many types of volume profiles are there, and then what are the significant areas in volume profile, because this is a very important aspect of volume profile. Then what are the trading strategies that we are using in our strategy based trading. what are the additional indicators that we are going to use, and then finally I'll show you on the trading view chart also all the confluence trading, entry, exit, stop loss kind of thing. Right. To start with, let's see what is volume profile. So volume profiles, it takes all the volumes that are traded at a particular price. Instead of, if you see standard chart, you see volume bar at the bottom, right, where it says at that particular time how much volume was punched in. Whereas volume profile talks about the volume that came at a particular price. And it depends on you whether you're looking into one session, you're looking into multiple session, or you're creating your own custom, period. Based on that, at a particular price, it gives a very clear idea where the market perceives that that particular point is fair price that a market can give for that. So the volume profile is very important from that, because it takes volume that are traded at a price and it displays it under the price scale rather than on the time scale. So that's a very important part of the volume profile. That is very good for swing trading, though we can use it for scalping also, but it generally works very well from a swing trading perspective. There are areas in the volume profile which acts really very strong support and resistance zones. So where you know when the price reaches there will be some action, some reaction will be there. Why? Because people have put in a lot of money, and not just retailers, is the smart money that is there, where at that price they will definitely try to defend if somebody is trying to break out, or if they want to take it, reverse it from there, they'll reverse it from that position. So that's why it is important. On the left, I've given chart just for your reference in terms of how the volume profile looks like in TradingView. This is a very similar example. So you'll see different parts of it. I'll talk about that in the next slide. But what is important is the numbers over there, and you have the blue and the orange color bar. So blue indicates the bid side of it, the buy side of it, and the orange indicate the sell side of it. Though I am saying buy and sell, but it is not exactly like that. There are different numbers that goes into it. It is like who is the active buyer and who is the passive buyer, who is the active seller and passive seller. So who is an active buyer? Active buyer is when you place a limit order which gets executed, converted into a market order, that becomes the active order. Whereas the passive orders are all limit orders. So we place limit order, right? If the price is at 475, we place it at, say, we want to buy it at 425. So 425 limit order we add. So that becomes a passive order. Whereas when that price comes to 425, or if you're hitting a market order, that becomes the active price. So this blue and orange indicates some of both. So don't confuse. Sometimes you'll see that stop loss hunting also does. They do like that, right? Why? They'll put a lot of limit order, and when the price reaches there, they'll remove all the limit orders. So immediately, everybody will get trapped over there. So this is also one of the strategy big players are using in that, using volume profile. Moving on, what are the different types of volume? If I'm going fast, Ravinas, let me know. No, I can go slow on that, because we need to cover so many things, right? That's why I'm going a little fast. What are the different types of volume profiles? There are two main type of volume profiles. One is session volume profile, which is like every day that you trade. It takes that as one session, and it covers the volume traded at different prices in that particular session. You can also have a fixed range or the periodic volume profile. In the periodic volume profile is that if you want to check for a week how the trading has taken place, like one expiry to another expiry for a weekly expiry, you can check from Friday to Wednesday evening how things are, where the maximum volume has been added, at what price. So that some reaction will happen during expiry at that time. So you can consider that. You can also increase it, by a month or two, those things, if you want to analyze it for a longer period, right? Then what are the significant areas in a volume profile? This is important. On the left side on the chart, you'll see certain lines are there, some arrows, some abbreviations are there. So the first important part is the value area. This is the value area. In value area, you'll see a lot of volume being traded at that time, right, during that session. So this is the area where most price action is happening. So this is the area where most price action is happening. I'll show you on the chart also, but this is a TradingView chart, and you can see that this is from 27th May till 3rd of June. So and value area can shift. It is not necessary to stay there. When people see that this is a fair price and then suddenly they want to take it lower or higher, the value area can also shift, right, in the chart. Now, point of control is the highest volume node. So each of these are nodes, right? So if you see this particular red line, this POC that I'm talking about, this is the point of control where the highest volume being traded at that particular price. Now, it serves as a very important reference for all market participants. If you want to do a swing trading, you know that when the price comes here, some reaction will take place. Like if you see in this case, it started from POC, it went up and then came down again. At POC, there is a reaction that happens. And even the next time it came, it broke that POC, then only it went down. Again, it came up and then some reaction happened. So POC is a very important, it serves as a very important reference point for all market participants. Right. Now, next is the low volume node. Right. The low volume nodes, if you see on the top and at the bottom, these are all low volume nodes. That means not much volume is being pumped in over there. These are small clusters of volume in a volume profile. These are also known as gaps. And traditionally and historically, what we have seen is that the price hates to stay in this area. So whenever it breaks out from the value area, it moves very fast. So that is one strategy you can apply, that when it is hitting the low volume node area, there will be momentum, there will be volatility, there will be momentum, price will move fast, and equally the price will come down also, because market do not like those gaps. Now, one thing also we need to understand, sometimes it'll go up and start trading in that low volume node area. Then it's a very clear indication the market is consolidating and now market profile is moving from low area to high area. Similarly, when it moves down, it is like from a high area to low area, the market profile is changing, and you'll see that high volume nodes starts coming in those areas at that time. High volume nodes, these are the large clusters of volume, as in value area, you'll see these are the high volume nodes that is there. Now, in this value area, there are two important lines. One is value area high, VAH, and value area low. So these are the two, you can consider is that value area high is the highest point of the value area. And there will be some change that will take place at that time also. Sometimes you can use this as a target if you have taken it from value area low or from POC. Similarly, when it is coming down, you can enter at that value area high and it can come up to value area low. So this could be one range that you can trade in a range bound market. And value area low is the lowest point of the value area. I hope this is clear in terms of what are the important areas in a volume profile. But this plays a very significant role while trading. Now, in terms of strategy, we are going to talk about the price transition strategy in a volume profile. So I have given it from 30th May till 3rd of June. You'll see the value area transition that is happening from left to right, if you see, and the POC transition that is happening. So on a particular day, the reaction is happening over there, but the next day, which is on 31st, you'll see the value area shifted down. So that's when market moved down and we opened low. It tried to go up, but again value area high was there. It got rejected from there. It came to POC again. Again from POC they tried to went up, but could not clear it, and finally it fell down, fell to the bottom part of it. Next day again it tried to come up. Again, it tried to trade in that range, POC being a very important, support and resistance. In this case, it was resistance. It was rejected from there itself, right? And yesterday, day before yesterday, Thursday, the range bound expiry that we had, it was traded more or less between value area low and POC. And finally, at later point after 2 o'clock, it's tried to move inch up, right? So this is the main standard strategy that you can use in terms of entry. You can, if you're entering at a POC, like in this case, make value area high as your stop loss and try to target value area low. And sometimes you'll see if it is a trending day, the value area or the POC itself will start shifting. So when the POC is shifting, you know that market is trying to move in that direction where the POC is moving. You can re-enter at that level, or you can book some partial profit at that point. Keep moving in that direction, and value area high and value area low will keep on moving based on how the market is moving. I hope this is clear in terms of how you can take trade based on volume based, volume profile based. This is purely volume profile. But what we have done is we have also added additional indicators to get more confidence. So you get a better trade and you are staying longer in the trade. So all the indicator list is there. You can refer to that. But there is one very particular indicator that we want to talk about is the TSV, and TSV is very important. I'll talk about that. Then we have also have something. If you see in the chart on the right side, we have volume-based color bars. Now this is volume-based color bar. The detail of that is in the below part. Every color has a meaning. It gives you some indication from a volume perspective. Remember, it's not the price, it's the volume indication that is coming from this colored bars. And you can take your decision based on at where and what type of volume is coming, so that you can, take a better trade at that time. Even from an entry and exit perspective, you can consider that. So the detail is there. You can go through it. This is from a trading view itself, right? Then we have KDJ standard that we are using. We have trend direction helper for higher high and lower low. So this is, we'll talk about it later in a different presentation. We have volume oscillator. I'll talk about that when we go to the chart. This is also very important in terms of understanding when the market is range bound and when the volume momentum is coming. Accumulation VAPI we already are using in different chart, and then money flow index is there for overbought and oversold conditions. Now time segmented TSV. This is the one I was talking about, time segmented volume. This itself, this particular indicator itself can be used as a trading strategy without other thing, because it considers time segmented volumes. And time segmented volume was developed by Warden Brothers, and it's a leading indicator for comparing various time segments of both price and volume. So that's why it is a strategy in itself. Now you see in the chart, there is a the chart is main chart, body chart is there, and then the indicator, TSV indicator is below. You'll see histogram, and red lines are histogram, excuse me, and the blue line is a moving average. So just a sec.
Sandeep, you there?
Sorry. Yeah, I'm there. Sorry.
All good.
Yeah, all good. So the histogram is important, and whenever the histogram is above the moving average, the market is going long, right? If the histogram is greater than 0 and greater than the moving average, price generally moves on the longer side, so you can go long on that. And below, you'll see there is a green box that will come over this. This will indicate there is a momentum in the market to go long. When you see cross line, that means the momentum, or we're reaching an exhaustion phase, and that's when you'll start seeing it will start slowly coming below the moving average line. Similarly, when it is going down, you'll see that it will start going down moving average line, and at the same time you'll see the price is also, market is also going down, right? And then when it is reversing, you'll see that there's a cross line that will come, and when it crosses the moving average line, that means market is reversing, and you can if it is above 0, try to go long, but you can still take a long position when it is closer to moving average and trying to come below the moving average line. Similarly, when you're on the long side, and though it is above 0, but when it is below MA line, you can think of going short in this case, provided you have other confirmation, and chart also indicates that, right? So this is from a presentation perspective. Now let me go into the chart. Any question till now, or we'll take it at the end?
There is a question, Sandeep.
Yeah.
Yeah, Avinash, you can take.
Yeah. There is a question, Sharadeep. So basically, the question from Chandru is, as those highs and lows, the lines get shifted dynamically, right? These are dynamic lines.
These are dynamic lines.
The target, basically.
So, what will happen if you have taken, I'll show you one second. Let me go there. You can see my chart?
Yes.
Okay. So what will happen, suppose the market is trading in this. So the red line here is a POC line, right? Now, market is trading in this, right? And when it breaks that, it will start coming down, and you'll see that POC will also shift if the momentum is high. What you see right now is the previous day POC. But when the current day you have a POC, or the trend is there, momentum is there, volume is there, then this POC will shift down. Till the point the POC has shifted, you still will have the value area and value area low. So you see this purple line over here. So you can still target for this one, as this is a swing trading, right? In swing trading, this is very helpful. If you have made an entry at this point of time, you can wait up to this point. That's one part. Second is, after certain moment, if you see that POC itself has changed from here to here, then you can book your partial profit over here, still waiting for it to hit this line, or you can make a re-entry over here till this point. What will happen when it comes to this line? You'll also see that value area low will start shifting down at that time. Right now it is all done, that's why it is not, but it's a dynamic thing. Value area low will start hitting down. You can trail your profit from that perspective. And from a stop loss perspective, when you are at the POC, when you're taking a trading at POC, you have a value area high somewhere here. So this is your stop loss. I hope that answers your question.
Yeah.
Okay.
Yeah, you can go ahead.
I'll go ahead then. Now, this is a chart that we have for volume-based trading. Here, in the main chart, we are using volume-based color bars, as I talked about. These are all colored bars. We have the KDJ, which is now it is helping all of us in terms of, we are not taking wrong trade because the KDJ is giving a different, message. So you'll always be short when it is in this area. We are looking for long opportunity when in this area. But there is one thing that is very important, which recently when I discovered after Jagan sir explained this, is that this blue line. Blue line gives you an early indication of change in the direction. It may not sustain there, but at least it will give you a very early indication of that, and you can consider that as making yourself ready for the next entry or the other side reversal entry on that, right? Then the other indicator we are using is TDH. TDH is I think Daniel will talk more about that. It gives you an idea about where the higher highs and lower lows are being made, which also helps you in terms of deciding whether to go short or to go long, right? Finally, on the indicator side, the top one is the money flow index. This money flow index is very important from overbought and oversold conditions. So you can take this, and this will help you in your decision making. TSV, as I talked about, TSV is there. Volume oscillator is another important one. This talks about the volume trend, not the price trend. Now, volume trend, why it is important? Because you see there is an orange line here. This is the midline. So it is what it does. It takes 14 period and 34 period volume and subtracts 14 period from 34 period to see where it gets plotted. Now, if it is plotted above the orange line, that means from a volume perspective, the momentum has come. So you can look for, opportunity in that direction, wherever the price is moving. Remember, being up doesn't mean, being on the upper side doesn't mean that you will go long. You'll go long and short based on the price. Whereas whether the momentum from a volume perspective is not there is what this will tell you. Now, if it is at the orange line, generally, when it is in range bound, it will either be on the orange line or it will be below orange line. So this indicates that volume is not there. As you can see, my cursor from 11:12 till almost 12:20, it was below the orange line. So there was no momentum. So there is no point running after any trade. Otherwise, you'll keep on hitting your stop loss. What you need to look for is when it is starting to turn, and at that time, if there is a volume colored bar also is coming, that you can consider. And then when it starts moving up, then that you're in the right direction, the volume is supporting you. Then when the reversal comes, we need to talk about that. That's a different thing, right? But at least if it is on the orange line and below the orange line, do not try to go for it. Trade. If you want to go for it, don't be aggressive. You want to try one or two lot, you can try that just to understand how this works. VAPI is another indicator which we already we have been using it. Last one is the volume momentum. Volume momentum also gives you some indication about the volume. this if you start observing, you'll see that whenever the volume is increasing, it will start. It compares from the start of the day and how the volume parameter is doing, right? So these are the indicators that we have used on the chart. Now I'll take an example. If you see yesterday at around 12:20 till 12:20, there was hardly any movement. We have been struggling to see where the market is going, right? Now around 12:20, you got a small volume candle over there, but at the same time, you see what is changing in this place, TSV. You see the TSV started coming below the MA line, right? So that is one indication. Before that, even though MFI was not giving a very clear indication, but we knew from the morning that market is in a downtrend. It is bearish. It is not going up since after it started at a very high. Then you have this confirmation coming from volume oscillator. So this tells you that now the volume momentum is coming, so you can go short on that one, right? And then when this one TDH gave a lower low, and you will see that there is a change happening at KDJ blue line also. That's the point you should start preparing for exit. This is one confirmation that you are getting. Even Lazy Bear VAPI is also giving that indication. Below also you'll see that it starts reducing. The volume strength is coming down. So you know that it is going to turn here now. So that's an exit you can do. Stop loss, as I said, that it will be if it is very close to POC, just over POC value area high, you can keep it at that level. But right now the value area is too high. So you can keep it somewhere around the next swing high and low, right? That depends on how you want to. Now another one that came was the big one, which came at around, from a indicator perspective, it came around this time, around 1418. But since I was observing this, I was finding that every time the price was trying to go down, it was getting rejected. And this particular candle gave a very clear indication that a big dozy. Try to went up, try to went down, nothing happened. And then KDJ also started giving indication somewhere here. First time it tried to came down, it didn't do much. But now here it gave an indication, and so I entered at this point. So this gave me a double confirmation that yes, the price is at least not going up. I don't know how far it will go down. But at that time, after that, I started seeing that this TSV started coming down, and we got the volume also. And then the rest of the day, it was like that. Finally, there was a small pullback, and then it went up at that time. So KDJ, along with the KDJ blue line and TSV and volume oscillator, were giving clear picture in terms of shorting the market. So this was, we had two opportunities yesterday, although there was one opportunity at the end also, but it was not very sure one. Let me show you something that happened on, I think, 30th or 31st, where I had a lot of opportunity coming using this strategy. Yeah, this is the one, 31st. So first long opportunity came at 933. And you'll see that, though it was up, but it was not giving a very clear indication. But KDJ gave a very clear indication at this point of time. And then when it came here, it went up, there was a pullback, and then it went all the way up to POC. And right now you're looking to POC, but at that time, POC was somewhere, I think here, when it started. And then it moved over there later point of time. So it was giving a very clear indication where you can go, and the value area high was here. So one round of selling came from there, came down again. Again, you got another opportunity around 1151 that went up. Again, it went down. So I didn't go short on this one. Otherwise, people, if they're comfortable, they can go short on that. But at that day, it was looking more bullish. So I was more on the long side. Then it came at around 1330. You see this one. So again, same thing happened. It went up, and KDJ was giving very clear picture. MFI was giving a very clear picture. That's how. Though I missed the big one, which was this one, but was not expecting, since it was after 245. I was not expecting 3 o'clock it will go. But anyway, I didn't took part in that rally. But that was also a very clear indication in terms of, if you look into TSV. TSV was giving a very clear indication along with this one, volume oscillator. So these are some of the examples that are there. If if this is enough, I think, hope people got an understanding of how to use volume-based, trading strategy. So this is not just volume profile, but this is volume-based trading strategy, where volume is the key. Avinash, any other question? I think I'm
Sanadeep,
done with the
I just
presentation.
want you to, hi.
Yeah,
Sanadeep,
hi.
hi.
Yes, sir. I can hear you.
This, the one thing you keep mentioning is that this POC coming down and going up, right?
Okay, yeah.
So I think can you go and explain it more, how visually we can see that?
I can do that. Yes, I'll take this example only. Let me try and replay. So, considering the time I was not using it, let me see if I can do this. So let's take 31st 9:15 candle. So here we are. Let me put it on the maximum speed. Avinash, we have time, right? 5 minutes. Okay, so let me run this. Now you see this, the very first candle. It opened. Okay, I think I need to stop. Just bear with me one second. Okay, it's not going. One second, let me retry again. Trading view is not responding. Hello, am I audible?
Yes, Anadeep. You
okay,
are.
I think trading view is not responding. So just let me see.
You want to close it and open it?
Yeah, I'm trying to do that. I think let me do that. Oh, it's not allowing me to do anything. Okay.
Just close the browser and reopen it.
Sir, refresh the chart.
Let me do that. I think maybe because of the colored, volume bars got hanged there. Okay, let me try again. Okay, so this is end of 30th May, and we'll start from 31st. Now you see here, oh, it doesn't stop, right? Oh, okay. There's some problem, it is not stopping. When I'm pausing it, I know there's some problem in this.
Yeah.
I'm not able to pause it.
Sanadeep, have you done this bar replay and you're on a line chart?
Yeah, I've done that. It's just that
Maybe it is still on that.
No, sir, I have this, bar replay.
Is it off?
It is on, it is moving, right?
Just reduce the speed completely then in that case.
Yeah, let me try that. And then when you're stopping, it stops working. Anyway, I think let me use this chart. This might help. because nothing is there. In this case, we'll only use the POC. Okay, let me try now. Speed is slow. I'm going here. So what happened? The very first candle was a green candle, and you see the point of control is here. Now, because other indicators are not there, no, this is not stopping. There's some problem here. So you see the point of control is here. So what you can think of is when it is coming down from value area high, it has broken, coming to POC. If it breaks here, then you can think of going down. Now you have a previous day POC also here. Let's see. Right now, what will happen? So I think this is the point where it broke the POC, and the next target was this POC, but value area high also could be one place where you can take an exit.
Sandeep, actually, my question was how to identify the movement in this POC. That was my question.
Sorry, come again, sir.
I was saying, you have been saying that the POC is shifting, right? Depending on, so how visually you see the shift and...
So what will happen? Your entire value area, this red line is there. Whenever a high volume node, so now you see that there was an entry at this point, 936, started moving, went to value area high. You could have taken an exit over here, or the other next exit is the previous day POC, because this is early in the morning, right? That's one thing.
Now my question is a little bit different, Sandeep.
Yes, sir.
You see the POC is shifting, right? Up.
Yeah.
Yeah. Then, of course, this trade I understand. When you say the point of control is shifting upwards in this case, right?
Right.
So how do you see that? How do you?
So what will happen right now? Okay. So your question is, how do you see the POC moving and why it is moving up, right?
Correct. That's my question.
Yeah. Okay. So what will happen when this is the value area and this is the high volume node over here? When market starts moving up and starts trading at this level, suppose, where you'll see that most of the price action or the volume action is taking place at this point, then the POC will also shift from here to here, because that's the market thing, that's the fair value, right?
Okay.
And that is so also an indication.
You see that in live session. That's what you.
Yeah, you'll see that it is. And I think this day it happened. That's why I was taking this example. So just see how it goes. Because I know this POC finally moved here, somewhere here, because that's where the market fell the
Okay, I thought it would come in action replay. It doesn't come, so it's
fine. It doesn't come.
Okay.
And there is some problem in action replay, because yesterday what we were
doing was not coming like we did for the other things.
Right.
So this particular line is not moving in action replay. So I understand it will be seen in the live market.
In the live market, definitely it will be there.
Thank you. Thank you very much.
Yeah. Okay. Good. Any other question, Avinash?
One sec, just hold on, please.
Okay.
There are. Okay. Chandru is asking to share the chart template, which we will definitely do. Ashutosh here, this works good on 3 in time frame, 3 minutes time frame, and with normal candles. Does this work Does this work good on a 3-minute time frame?
It works good on any time frame.
Okay.
Right. Since this is a swing, if you want to do it for swing trading, you can use 3 minutes, 5 minutes, and if you want to view the a week thing, then you can go for 15 minutes to 1 hour.
Okay. Okay, and please show the developing POC value area high and low. Can you please show the developing POC and value area high?
Yeah. For that, you need to enable the option.
Yeah.
Stop. Okay, again it went. Okay, I'll be able to show it. So if you go to this, the settings, you have extend POC right, extend value area right. This is one option if you want to do it. And you have an option of developing POC and developing value area. So this, if you enable in the live session, you'll see that, developing POC will also be visible there. This is the setting you need to enable in your chart.
Great. Great.
Okay.
Thanks, Anadeep.
Yep.
Yeah.
Okay, I'll stop sharing now.
There is one question on share the template. It is part of 1.2 basically.
Yeah, it is.
Now it is going to be updated because after that, this was 2 months before it was there. Version 3 has not been posted. Version 3 has been posted up to 2 series, 3 series, and 4 series. 1.1 and 1.2 has not been posted. So this particular volume profile is part of 1.2 in the basic charts. So that will be revised now sometime on Monday. Some small adjustments need to be done, and it will be version 3 will be released. So that is where you will get the template. You can copy and make it into your own template. Thank you.
Yeah. And in the meantime, if you want to use it, I've already mentioned all the indicators that we're using with the details, like KDJ, which plot you need to enable and other things. You can, use that. And I think one thing that will help if you can start creating your chart using those indicators. That way, you will understand much better rather than just using the template.
Great.
Ravinash, we can move on to the next.
Great. Thanks tons, Anadeep. People have been waiting for volume profile for quite some time, and thank you for throwing light on the topic.
Sure.
Thank you so much. Guys, up next, we've got a new volunteer. It really gives joy to see new volunteers coming up and presenting in the group. That's what the group is all about, collaboration and, new people coming up and taking up responsibility. We've got Daniel coming up this week. Daniel is a software engineer from Kochi and relatively new to trading. He's been trading for about 1.5 years now. And Daniel is up next. Daniel, could you please share your screen?
Yeah, thanks a lot for the introduction, Avinash. I'll share my screen.
Yeah, please. And Daniel is going to be talking on volatility-based strategy. You could just wait and...
Yeah, can you see the screen?
Just taking all the information that has been thrown onto you. Yeah.
Okay.
Yeah, Daniel, for you now.
Yeah, okay. I'll start. So I'll just quickly introduce myself. I'm, as Avinash has already introduced anyway. So I'm Daniel James from Cochin, Kerala. And I have been trading for nearly 1 year, one year and 1.5 years. So my profession is software developer. I'm a software developer and I'm doing trading as a part-time thing. So that's it about my introduction. I will quickly go into the slides. Yeah, okay. So this is the overview, like what all I'll be going to cover today. So first I will be starting with the introduction about the volatility, and then I will be explaining the indicators that we are using in our setup. Then I will move on to the entry conditions, like the for entering the trade, then to the exit conditions, and at the end I will show the demo in trading view, like how to take the entry and exit, etc. Yeah, so I'll go on. So this is the basic definition of volatility. It's the degree of unforeseen rapid price movement of an asset over a given time period. So like we might have seen like sometimes the market moves very violently, so all those are because of this volatility. And generally high volatility means high risk, but many experienced traders aim to profit from volatility, often using scalping techniques to make lots of small profits. So that is our basic, like that is the basic of our strategy. Like we'll be trading when the volatility increases, and like it's kind of scalping. Our trade will be of very short duration, and we'll make small profits from that. That is the basic idea of our strategy. And this is just the difference between the liquidity and volatility. Like volatility actually means that which price, like a volatile market means the price will be moving very rapidly, and liquid market means like where we can buy and sell quickly. Like it's both are completely different things. Like liquidity means like we can buy or sell easily, that is basically liquidity. And volatility means the price is moving very rapidly. Yeah, that's it about the basics of volatility. I hope it is clear. And next, I will go to the indicators that we are using in our setup. So we are using Heikin-Ashi candle and 1 minute time frame, and we are using many indicators. I split it like I split it into three parts: volatility indicators, trend indicators, and other indicators. So volatility indicators is the base of our strategy. Like we will be using the volatility indicators mainly, and based on that we will be using the other indicators as well. So I will be explaining the indicators one by one. So I'll start with the volatility indicator itself. Ultimate volatility indicator. Okay, before that, the first is the Heikin-Ashi candle. So Heikin-Ashi, as you all know, it's a different type of candle pattern, other than the candlestick. Yeah, normal candlestick. So the purpose of Heikin-Ashi, as you all know, is to reduce the market noise, making candlestick charts more readable, and trends will be easier to analyze. These are the purpose we use the Heikin-Ashi candles for. Now going on to the indicators. First one is ultimate volatility indicator. This is the first one in the indicator list. So this indicator shows how volatile the market is. Higher the volatility, higher the value, higher the volatility. So this is an example of ultimate volatility indicator pane. So you can see in the middle, like when it's going up, that means the volatility is increasing, and after that it is coming down, and here you can see it's going up again. So this means here the volatility is increasing. That is the basic about the ultimate volatility indicator. And next indicator is sigma spike. So this is also another volatility indicator. This shows if there is any sudden spike in the underlying price. So our strategy is basically based on, like, the main indicator that we use is the sigma spikes actually. So you can see sometimes there will be very big spike, and we will be utilizing that spike to get the entry, and later we'll be exiting. So for entry we will be using the sigma spikes very much. So hope you understand. Like I'll tell an example. Sometimes you might be seeing like in 1 minute itself, Bank Nifty can move 100, 200 points and all. So at that time, and it will come back suddenly. So that can be considered as a spike. So at that time, the sigma spike will be like this. So hope you understood this. Next is super trend channel. So I'll just go to the list again. So I have covered these two things, volatility indicators. Now I'm going to the trend indicators that we are using. So like definitely we are trading based on the volatility, but even though so basically how we are trading is when there is volatility we will enter the trade, and when volatility reduces we will exit the trade. That is how we do. But when we enter the trade we definitely need a direction, because we are doing option buying or future buying. So we will definitely need a direction for trading. So for that we'll be using the trend indicators. I hope it is clear why we are using trend indicators.
You
We are
have to
using
admit
around.
3 people. Mine is freeze. I don't know why. There are 3 people waiting. Yeah.
Okay. Yeah, can I continue, sir?
Yeah, sure.
Yeah, okay, okay. Yeah. So we are using the trend indicators to understand the trend of the market. And when the volatility comes, we will be entering the trade according to the trend. That is the basic of the strategy. I'll go with the first trend indicator, that is super trend channel. So this is the channel, like you can see there are three lines, and those three lines can be understood as the, like that three lines are known as the super trend channels. So rising channels indicate that there is it's an uptrend, and declining channels indicate that it's a downtrend. So if you see the left side, in the beginning the channels are here, and then the channel is going up. So the channel has been pushed little upwards, so that means the trend is also upward. After that, when the market came down a little bit, the trend is also coming down. So in that case we can understand that the trend is downward. So if we take some random points, so if I take consider here, so if I want to know the trend here, what I will be doing is I'll check what was the previous place where the super trend channel was. So previously it was in the little bit upper side, so I can understand that it is in the it is in a little bit downtrend. But here, since, yeah, like that, yeah. And then here it will go a little bit upwards, so trend is a little bit upwards. So, and each of these lines will act as a support and resistance as well. Like there are three lines, these three lines can act as support and resistance at many points. So if you see, the this line is respected multiple times here and acted as a resistance, then the fall came, and this red line acted as a support, and this was broken, and it gave a breakout, etc. Yeah. So I'll go to the next trend indicator. Next is KDJ indicator. So KDJ indicator, most of you will be knowing by now. So there are three lines in KDJ indicators. The lines are known as K line, D line, and J line. So most of you might be knowing the stochastic indicator, and stochastic indicator is having two lines. So those two lines are K line and D line. So along with that, we will have one more line that is known as J line. So stochastic indicator is actually to get the momentum, but here we are having three lines, and we might be able to get momentum from this as well. But in our strategy, we are using this indicator to get the trend. So using these three lines, they are doing the indicator is doing some calculations and getting the trend, and it will apply the trend to the background. So if the trend is positive, it will give the green background, and if the trend is negative, it will give the red background. And in our strategy, we don't need the lines. Actually, we are not considering the lines. We are just considering the background colors, so that we will we just need to know the trend. We don't need the lines. We will be just using the background colors. So that's it about the KDJ indicator. And next trend indicator is trend direction helper. The short form is TDH. So some might have heard about the TDH. So this is an indicator that provides many things like zigzag lines, support resistance lines, and HHLL labels. HHLL means higher high, lower low labels. So these three things they are providing actually, but in our strategy we are just using the higher high and lower low labels. So you can see the higher high here, and then you saw an higher low. So usually when a higher high and higher low comes, it will be going upwards. You can consider like that. And when a lower high or lower low comes, it will be usually going downwards. So if here you can see higher high, higher low, it is going little bit upwards, and then lower high and lower low again. But here the trend was wrong. So this didn't give the correct trend that time. So here, if you can see, it was forming lower high for some time, lower high, lower high, lower high, right from lower low, and then it broke down in the lower direction. So this is how we use HHLL labels for getting the direction. Yeah, and the next trend indicator that we are using is moving average. So we are using moving average 21, and yeah. So basically, the moving average lines acts as a support or resistance, and also it will show the trend. Like if the market is below this line, usually we can say that it is a downtrend or something like that. But it's yeah, like we are not using it as a main indicator or something, but this is the idea. So you might be knowing the moving average mostly. So here, if you see, this acted as support for some time, and then it broke down, and then it acted as resistance. Here also, yeah, like that it will go. This is about the moving average. Yeah, and next indicator is CM Ultimate MA MTF V2. So this is a little bit fatter line, but this is basically a moving average itself. It's not a normal moving average. It includes some complex calculations and all. After that, this line is derived. So uh, yeah, it's not like our exponential or simple moving average. It's little bit different, and we might be able to say that this is little bit stronger than the normal moving average. Yeah, and this also we are using it in the same way like we are using the other moving average. So here we will be using it as to identify the trend and also to identify whether it's support or resistance. So if you can see the when it reaches green line, we can say that it's in the positive trend, and when it turns red, we can say it is in the negative trend. And next trend indicator we are using is volatility stop. So volatility stop, we are actually using this to exit the trade. So when we exit the trade, like this will the volatility stop will give some this kind of dots, and once the dot, like if it is in red dot, that means it is in the negative direction, and once it turns into the positive direction, and if we are in a short trade, we will use it as a opportunity to exit our trade and book profit or book the loss or whatever. So this is what volatility stop is. So it's a tool that put red dots above the price bars in case of downtrend, and green dots under the price bars in case of uptrend. Yeah, and we can use these levels for trailing stops as well. Yeah, so this is about the volatility stop. You might have got a basic idea. And next indicator is MTF Damini wallet meter. So yeah, I'll just go to the first slide again. We are done with the trend indicators. Now there are three more indicators that we use just for confirmation or those things. One is the MTF Damiani wallet meter. That is it's a momentum indicator, and stochastic, that is also a momentum indicator. And we also have volume, which is obviously volume indicator. Yeah, and yeah, wallet meter. Yeah, and yeah, okay. Damini wallet meter. This indicator shows the strength of the trend. So here you can see there are three lines, and all the three lines. Yeah, all the three lines represent the trend. Represents the strength of the trend. So if it is above, like there's a dotted line at 0. If the lines are above the dotted line, that means the trend is strong. And if it is close to the 0, or if it is below the 0, we can say that the trend is not so strong, and it might not be a good time to enter. So when it is when it is little bit higher, we can know that the trend is going to be strong, and we can enter the trade or whatever. And next is stochastic.
One moment. One moment.
Yes, sir.
Sorry.
Yes, sir. Hello.
Mr. Jagan, you there?
Sorry. Okay. Yeah. I
Yes,
got it right. The MTF here means multi-time frame. If people don't know, that means it can be used for any time frame. Before also there was the MTF volatility. Yeah, this is also multi-time frame. So wherever there is this MTF sign is there, that means you can use it as a in any particular time frame. Okay. And one more thing, see, stochastic and this volatile meter, you have moved it as other indicators, but actually they are part of the volatility indicators. Stochastic is not only momentum, it's also as a volatility element. And this volatile meter is basically a volatile. So you have to regroup it under volatility. Okay?
Okay, sir.
Daniel? Yeah? Yeah.
Yes, sir, I understood.
Yes.
I'll change it to volatility. Yeah. Okay, so stochastic. Yeah, can I continue, sir?
Proceed.
Yeah. Okay. Yeah. So now, when it comes to stochastic indicator, you when the blue line is the K line, and we will be basically looking at the K line. So, and the red line is D line. So in stochastic indicator, when the K line is above 80, we can say that the underlying is overbought, and when it is below 20, we can say that it is oversold. So when it is overbought, we can understand that it's going to reverse or something like that. And similarly, when it's oversold, buying can happen at that time. So that's about the stochastic. And next indicator is the volume. So uh, this basically represents the number of quantity that are traded in a particular time frame. You might be knowing it. Yeah. And that's it about the indicators. And now we'll come to the entry conditions. Before this, does anybody have any doubts regarding the indicators? Any indicators? I think no. Yeah, I'll continue with the entry conditions. So this is the entry condition. A spike should have happened in one of the last three candles. That is the first condition. So spike means we have seen one ultimate volatility indicator. Sorry, not this. Sigma spike. Sorry. Yeah, in this you can see a spike happened here. So this can be considered as a spike. So after this, within 3 or 4 candles, we can take the entry. That is what it means. So that is the first condition. A spike should have happened in one of the last 3 candles. So according to your trading style, you can make it 4 or 5 or anything. It's fine. And another condition is volatility should be increasing according to ultimate volatility indicator. I'll come back to ultimate volatility indicator again. Yeah. So if you are taking entry at this point, you can see that it is increasing from the previous point. So this is a good time to enter. But if you consider this point, you can see that volatility is decreasing from the previous candles. So that means it won't be a good time to enter because the volatility has finished and it has started decreasing. So our setup is for the volatile market. So it might not be good for that time. So that is the second condition. And and in case of long entry, if you are taking long, entry should be taken from support of moving average or super trend channel. So if you are taking the super trend, if you are taking super trend, if you are going long, it has to be taken from some bottom red line or middle line or something to go upwards. And if you are taking short trade, it's like either this line or the middle line or anywhere. And similarly, if you are using moving average, similarly, like you can see that the moving average will act as support or resistance. So depending on a trend, like at this point, if you want to take a down trade, like a short trade, we can use this as a resistance and take the short entry. That's what it means. Like market might be here, so we have to wait till it comes to this resistance line so that we can take the entry. That is what it means. Yeah, and same here. And along with that, 2 of the other indicators should support the trend direction. So we have other trend indicators as well. So among that, any two of the depending on the trading cell, it can be, you can wait, look for more confirmations as well. Maybe if you are like, if you are following the same thing, you can wait for two confirmations from other trend indicators, and once you get the confirmation, you can take the entry. That is the entry condition. I hope it is clear. I'll explain it again when it comes to trading view demo. And next is exit condition. Exit condition, yeah. So if volatility start decreasing in ultimate volatility indicator, then it can be exited, like irrespective of what the profit or losses, because basically it's scalping. So when volatility starts decreasing, we can just exit the trade and book whatever we have. So I'll just show the ultimate volatility indicator again. Yeah. So here we might be taking a trade, and the volatility might be increasing consistently. And at this point, you might have noticed that volatility started decreasing. So at that time, it's no longer good to hold the trade. So we can exit that trade at that time. So when we see some example, we'll understand more better. And that is one exit condition. And if volatility stop goes in opposite direction, then it can be exited. That means this is here, like we might have entered a short trade, and we might be waiting for an exit. And at that time, if the volatility stop changes to green, we can immediately stop the trade, exit the trade, and proceed. And in case of long, if the resistance of moving average or super trend channel is hit, then profit can be booked. Yeah, so if we are going for a long trade, if we find some resistance of moving average or super trend channel, we can exit there because it's scalping, and there are high chances that it gets reversed from there. So we can exit. I'll tell an example. If we consider trend channel, we might have taken a long trade from here, considering this as a support. And when it goes up, when it reaches the middle line, we can just exit and book the profit, because uh, our trade duration is very less. So there is no point in holding for so much time. That's it about that is one exit condition. And next one is similarly for exit, we can exit when the support of moving average or super trend channel is hit. And then other thing is, in case trend breaks in the opposite direction, it can be exited. So if we take the super trend channel again, imagine we took a yeah, okay, yeah, here imagine we took a long trade, like considering this as a support, we took a long trade, and unfortunately it went in the opposite direction and it broke the trend. In that case, we had to exit when the trend happens in the opposite direction, like when one candle closes or something. Trading view demo. So till this, does anybody has any doubt?
None as of now, Daniel.
Yeah, okay, fine.
Please continue.
I'll quickly go to the trading view, and I'll start by showing how to set up the chart. Yeah, these are the things we need. So the first thing is okay. I will first I will put the things that we need along with the Heikin-Ashi chart. So this is Heikin-Ashi chart, and it's 1 minute candle. That is done. And next we need the super trend channels. So, so yeah. Super trend channel we are using is super trend channels Lux by Lux Algo. So this is the super trend channel we are using. You can select that, and yeah, this is the super trend channel. and we don't have to change any settings as such. We can leave it as it is. And next thing we will be needing is KDJ indicator. KDJ indicator by IMLT code. Yeah, this the first one. So this is the indicator that we need for KDJ, and we will be needing it in the main chart. Like we don't want it in the downside, and we don't need the lines as well. So first we will remove the lines. For that, we'll go here. Inputs we can leave it as it is, and in style we can untick the plot so that the lines will get removed, and we will just have the background color. So we will be just needing the background color, and we can move this to up direction. So we can click these three dots and move to existing pan above. So it will join along with the normal chart. Yeah, and next we will be needing the trend direction helper TDH by David. So trend direction helper. Yeah, this thing. So this is the, yeah, it's here actually they are giving lots of things. So we'll do one thing. We don't need the trend direction. We don't need the support. We will untick everything, and we'll just tick the show higher high and lower low labels. Like we are just using that. And in style also we can untick everything except the higher high lower low things that is below. So we'll untick everything. Yeah, here higher high, lower high, higher low, lower low. These things we can keep a tick. Other things we can untick. Yeah. Okay. Yeah. Now we are having just the higher high and higher lows. Okay. And next we'll be having the moving average. Moving average. And moving average is by default it is coming 9. We have to change it to 21. And next we will be needing the CM Ultimate MAMFV2 by Chris Moore. Oh, sorry, I forgot to write the name here. This is the indicator. Yeah, yeah, the indicator has came. The fat line is the CM Ultimate MAMTF moving average. And next one is volatility stop. So volatility stop. This is an inbuilt indicator. So I have clicked it, and you can see the dots here. So we got all the indicators, and now we will be needing the okay. Now we will add the volatility indicators. First one is ultimate volatility indicator. Ultimate volatility indicator. Yeah. So it's coming in the pane. You can see the bar colors are changing here. So you can do one thing. You can untick the thing in the inputs, like allow bar color change, so that this won't change the bar color, and everything else you can keep as it is. Next we will need the sigma spikes. Sigma spikes. Yeah, this also is causing the candle chart color change, I think. In inputs, yeah, we can untick this allow bar coloring change. Yeah, so that's it. And next is MTF Damiani wallet meter. MTF Damiani wallet meter 3.2 by XI Enolia. Yeah. And yeah. Yeah, this is fine. There are 3 lines. Yeah, we can leave it as it is. And next is stochastics and volume. Stochastic, we are using the inbuilt stochastics. And next one is volume. Volume. Yeah. So we got the volume as well. Now I'll just remove the slide so that you can see the trading view in big. Yeah. So this is our basic setup now. I hope it is clear. And now I will I have marked the entry and exit in another tab. I will just show some of the entry and exit. So here, if you see,
Sorry,
yes,
I'm sorry to interrupt. There is
yes,
some
sir.
small, first you try to show it in the chart. Particularly, I want to see about the super trend channel, right?
Okay.
So
Okay.
that itself, you don't need to worry about these indicators now. You go
Okay,
to
sir.
this chart itself, you make it a main chart, the body chart. Yeah. Can you do that
Okay.
and show the super trend which you have not talked about, which is the main thing? You can see
Okay.
very
Okay.
clearly how, no.
Hmm.
You know what I want you to do?
Hmm.
Remove this. You go to the
Okay.
chart itself,
Yeah.
you
Yeah.
show it in full screen.
Okay. Can I remove the other pane
No, you
indicators?
go top and you make it to
Okay.
the square one. I want to see the body chart in full screen.
Okay. Okay.
You know how to do it?
I'm not sure.
There is
Is
a
it like
box
this?
there on the top next to the wheel,
Okay.
like a rectangle. You press it, it will become.
Where is it?
Daniel,
Oh,
just
this one.
double
This one.
click on the chart.
Yeah. Okay. Okay. Got
Yeah,
it. Got it.
okay,
Yeah.
double, yeah.
Okay.
See
Thank
now,
you.
1, 2, 3. Can you make this because you don't need the other thing? Get it to the full
Okay.
screen, please. Right. So let's
Okay.
talk about this. See, there are 2, 3 things you could have done. I think
Okay, sir.
this is not the original chart push post. So okay, see if you want to really see, you have to reduce these colors a bit quickly. Can you do it? The colors
Yeah.
of
Yeah. Sure.
the
Sure.
KDJ, green and rose. Yeah, that one
Okay.
you make it to, no. You make it to purple because that background purple will come, the candles.
Hmm.
The purple below.
This one. This
No,
one.
no, no. Purple, left bottom. One, two,
This
three,
one.
fourth. Yeah, something like that. Yes. Choose that
Okay.
one.
This one.
So that, yeah, that's fine.
Okay.
Same thing
Okay.
also here.
Okay.
Then make this wick into black.
Okay. Wiki symbol.
Wicks in
Yeah.
black. So
Okay.
that is, and this red, you make it into orange down.
Okay. All the.
Yeah,
Okay.
that's all. So now
Okay,
it
sir.
looks better. You can clean. So yeah,
Okay.
just save it for now.
Hmm.
Okay, now I want you to do another thing. Okay, it's good in a way because we never explain how these things are done. So there's no issue.
Okay.
You
Okay,
quickly
sir.
go to KDJ. You don't have,
Okay.
yeah, you just open this to, yeah,
Yeah.
KDJ,
Hmm.
yeah, and go to, yeah, style. Reduce the color intensity. Choose a,
Okay.
yeah, 18%. No, I know it should be 18%. You can type it on the right.
Okay. Okay. Got it.
No, not there. Yeah,
Yeah. Right.
yeah. You just to change to 18, it will slow
Okay.
down. Same thing you do for the rose color also. Yeah, it will be much
Yeah.
better, you will see.
Yeah.
Yeah,
Okay. Okay.
see, now it's much better.
Okay.
So can you please, yeah, okay, right.
Yeah.
Now I want you to focus on this channel and explain how trades can be taken. Leave the
Okay, sir.
indicators. We already talked enough. You have already
Okay.
showed the setup. Just focus
Okay.
before you finish your presentation on this
Okay. Okay.
trades, how it is taken on this channel.
Yes. Okay,
Give
sir.
me a few examples.
Okay. Yeah. So here the here the super trend is coming down. Super trend channels are coming down. So here, when it touches the middle line, you can consider that as a resistance and take a short entry, because here, if you see, it's coming down consistently. So here, it is almost touching the super trend line. So here, you can consider as a short entry. And when it can I
No,
draw a
really,
line to?
Daniel, no, you are really going out of the track.
Okay.
Not only now, even the previous entries. Perhaps you are
Okay.
quite new in this group. I can understand,
Okay. Okay.
but I
Okay,
don't
sir.
want you to have a confusion among the viewers. No, this is
Okay.
not how the trade entry and exits are taken. You can just
Okay.
do what we do in Bollinger Bands, lower the band. This is also based on study deviation. Why we are
Okay.
taking super trend? Super trend and
Hmm.
VWAP are the most important support and resistance line. VWAP, it
Okay.
always moves around, and then many days we have seen that it opens in VWAP and closes around VWAP, because that is the way
Okay.
that is the middle line between the strength of the sellers and the buyers, right? So that is
Okay,
where
okay.
this is a neutral line. Above the VWAP, the buyers are in control. Below the VWAP, the sellers are control. Same thing with
Okay,
super trend. So the idea
okay,
of having
okay.
super trend is because it is providing a channel which we are going to have in the next presentation. We are going to talk about trading channel, and super trend
Okay,
is an important trading channel. So it moves around. As you see, can you please widen? You will see that
okay,
it is exactly respecting the channel. Actually, it's a very good, channel, very successful. You can apply even yesterday, today. You can see it will exactly the lower band. It is taking a support. It is moving to the lower high point at 12, 30, 35 that time. Again, it is taking a resistance, coming back all the way. We are talking about 400, 500 points or 300 points in each of these. And every time you can see, you can go to many days, it will be the same. It is so easy to trade. You take there when that is resistant lower high, as Sanadeep explained in his volume chart also, you should take a short trade. Go all the way. Of course, your
yeah, yeah.
first target will be your middle line. The second target, if you can wait, it will be the lowest band. You can capture 300 points. So that is the way it should be explained. Not you taking in the middle. No, we should try to
Okay,
take it
okay,
at the extreme points. And please
okay.
show, go over these extreme points.
Yeah, okay,
Now
sir.
you please explain from what I told you, how
Yeah,
to
okay,
take
okay.
a trade, show this extreme point, show that how the support is taken in this channel, how the resistance is done.
Okay,
Okay?
sir. Yeah.
Yeah.
So here we have got a lower low. So from here, and we can consider this line as a support, and we can take an entry here. So I'll draw a line here. Uh, I'll draw a blue line, and we'll be starting the entry here, and we can go, like we can take the long entry, and we can exit when it touches this green line. So here it is touching it, and we can exit it here, and maybe we can, if we are trailing, we can go up to the next lower high. So I can consider an exit here maybe, and I will mark, I'll make it as black. Yeah. So this is one trade, and I will just check how much points I can get. Sorry.
Uh, uh,
It's around here.
Daniel,
Yes, sir.
I think we have to stop your this entry discussions, because I don't
Okay.
think even before the way you are saying is correct. I thought
Okay.
we
Okay.
discussed this. Anyway,
Okay.
what
Yeah.
you know what we, no no we, no what we'll do is like this. When
Hmm.
we are going to go into the trading channel,
Hmm.
this is a channel. Super Trend channel is one of the trading channel on which
Okay.
presentation is coming. At that
Okay.
time, they
Okay.
will explain all the three of them, Avinash, Nilesh, and Renuka. They will explain how to take a trade inside the
Okay.
channel. Okay, so
Okay, sir.
let us leave it here.
Yeah.
So
Okay.
I
Okay.
don't want you to confuse people,
Okay.
because
Sure, sir.
I don't think you're clearly saying what exactly the trade should be.
Yeah.
So you
Okay.
should
Okay.
leave it
Okay.
here, and
Okay.
let us agree that this taking the trades in the channel. See, there are three
Hmm.
things. You can
Okay.
take, this is a trend. You can be a
Okay.
trader in a trend, right?
Hmm.
You can be a trade the range. Am I clear,
Okay.
audible, Avinash?
Yes, sir. We can
Avinash,
hear
am I
you.
audible? Hello? Okay. Can
Yes,
somebody
Mr.
come?
Jagat, you are audible.
Okay. Thank you very much.
Yeah.
Now, see, it is like this. We have three type of trades we can take. One is
Okay.
we can take a trade. I
Just hold on,
some
please.
background noise. Can people mute
Yeah,
themselves?
yeah.
Yep.
Shibi Joseph.
Please mute
I'm
yourself.
taking care of. Taking care
Yeah,
of.
and otherwise I will mute other from here.
Taking
Okay.
care of.
So please, now there are three types of trader you could be. You could be a
Okay.
range trader. That means you are trading between a range. That is one way of the market situation. The second way is that it could be a trending market. So you could trade on the trend. And the third is that you could be a breakout trader. So these are the only three type of trades that are available. Range trading, trend trading, and breakout trading. Okay. So now this presentation, the Super Trend channel and the presentation which Avinash and others are going to do, it is going to help us in two types of trading, which is basically trading within a range and trading the breakout. So that is what we have to understand the setting here, the context here. These channel tradings are basically going to take care of you can trade the range when the market is range bound. You can trade when there is a breakout. But when you come to do the trend trading, then you have other things like super trend strategy, you have the Renko strategy, you have the GMI, MI strategy, so many other strategies which we have already discussed about in the trend and momentum. Okay, so we leave it here. I think it's time. Avinash,
Okay,
we can
sir.
go to the next presentation.
Sure.
Otherwise, it will take time.
Yeah.
Oh, okay, sir. Thank you, sir.
Can you see my screen? Visible, Mr. Jagan? People?
Yes,
Yeah.
yes.
Thanks, Daniel, for coming forth and volunteering. I hope you learned a lot. You've picked up a lot from all the efforts that you've put in. Friends, the next topic that we're going to cover is pretty simple, but yet very, very important. We're going to be presenting different trading channels and their properties. First, let us understand what a trading channel is. So what is a trading channel? A trading channel is drawn using parallel trend lines. These parallel lines could be a set of 2, 3, 4, 5 parallel lines. It depends upon the trading channel that we're using. These parallel trend lines denote the area in which the price of the instrument is trading. Hence, it is also called as the price channel. We will be covering 6, probably 7 if time permits, trading channels in our presentation. These channels are linear regression and Keltner's channel, which will be presented by myself, Stark Band and Andrews Pitchfork, which will be presented by Renuka, Dawn Chain channel, Bollinger's Band, and if time permits, like I said, Fibonacci by Nilesh. Now let us look at linear regression. The first channel that we're going to touch upon is the linear regression. To understand the channel, let us first understand what is regression. Regression is a statistical concept that describes how things tend to regress or revert to the mean over a period of time. Okay, I'll read it once again. It is a concept that describes how things tend to regress or revert to the mean over a period of time. Let us have a quick look at the visual depiction of the same. A pretty simple depiction here. The red line denotes, the red line out here, it denotes the mean, the statistical mean, and the green line represents the price movement. This green line that you see is the price movement. Just look at the green line. Whenever it is moving away from the mean, it tends to get back to the mean. You see that? Throughout the price action, it is getting back to the mean. At one point here, it is given a massive breakout, wherein it went too far away from the mean. This could be called as an anomaly, something which is not normal. But just notice how it gets back to the mean again and starts moving around it. Right? Now let us look at the statistical definition. What you saw earlier was definition of regression. Statistical definition of regression is it's a method used in trading and other disciplines that attempts to determine the strength and character of the relationship between one dependent variable which will also denoted by Y, and other variables, all known as the independent variables. The linear regression indicators typically used to analyze the upper and the lower limits of the existing trend. It was developed by Gilbert Raff in October 1991. Hence, it is also sometimes called as the Raff regression channel. Let us look at the visual representation. This is the July 2nd chart that you're seeing, friends. So the top line here represents the upper band, which is 2 standard deviations from the mean. The middle line is the mean line, and the upper band is 2 standard deviations away. The bottom line here is also known as the lower band, which is again 2 standard deviations from the mean. How do we read the line? The center line is the mean, like I said earlier, is the regression line. The 2 lines in the top and bottom are 2 standard deviations away from the mean line. So the channel is basically based on mean and standard deviation. Hope that explains the linear regression channel. We will see the explanation on the chart at the end of the PPT. Now let us look at the next channel, which is the Keltner's channel. Keltner's channel refers to a technical analysis indicator composed of 3 separate lines. Like in the linear regression channel, we have 3 separate lines again over here in Keltner's channel. It includes a central moving average line. Mind you, friends, the difference here, this is a moving average line, and in linear regression, that was the mean line. So it includes a moving average line along with the channels located above and below the central line. This indicator is named after Chester Keltner, and it was developed in 1960s. Keltner's channel is a volatility-based indicator and uses average prices to plot upper, lower, and middle lines. Let us now look at the visual representation of the same. If you see, the middle band is the exponential moving average. Like I said, Keltner's channel is based on moving averages. So middle line is the exponential moving average. The upper band and the lower band over here are 2 multipliers away. Let us look at the Keltner's channel on the chart now. This is the 3rd July chart that you're seeing, friends. And this is the upper band, the lower band, and the 20 moving average in the center, in the middle. Now, if you just have a look at the chart, how the price is moving within the band, okay? Next, how do we read the chart, or how do we read the lines? The center line is the moving average, like I said, a 20 exponential moving average. The 2 lines on top and the bottom are 2 multipliers up and 2 multiplier down. So this channel, the Keltner's channel, is based on the true average true range of the day. So just to put the difference between the 2 channels, okay, both the channels are using three lines here. But if you see in the linear regression, it is based on the standard deviation, and in the Keltner's channel is based on average true range of the day. So, friends, the basic you've seen the basic difference between the 2. Now let us have.
Hello.
Yeah. Mr. Jagan, yeah. Hello. Hello.
You're okay, Avinash, continue.
Yeah, okay. So now let us have a look at the two channels on the chart. Is the screen visible? Yeah.
Yes, sir.
Yeah. Thanks, Nilesh. So we're looking at the 3rd July chart. If you just have a look at the chart now, this is an indicator that has been put up by Mr. Jagat. This is known as the linear regression indicator. You can just add the indicator from indicators and get on to LINGER. That's how you get it. This is where the indicator lies. So if you have a look at the indicator, this is a dynamic indicator. Now, this is at the end of the day. I'm just showing you a part of the chart here. So if you see here, from how after touching the lower band, it has moved back to touch the mean. From the mean, again, the movement could be either side. So it's gone on to touch the upper band here. It gets back to the mean again, but it stays within the range. how beautifully it's come out, you can see here. But the moment I move the chart on the left side, you see the price range is outside of the chart. This is because this is a dynamic indicator. I'll do one thing. I'll just show you a replay as to how the indicators move throughout the day, or probably from the 2nd July. If you put it here, I'll have to change the candles to, okay, these are candles. Let's do a replay. Okay, this is where the linear regression was on the 2nd of July. So you see how it's moving back to come back to the mean. It's staying close to the mean. Guys, please notice how the channel is just shifting through the day from an upward trend to a lower trend to a downward trend. But the price stays within the channel, close to the mean. See how the channel is changing. There you saw a breakout, right? You saw a breakout here. There you go. As the price increases, it expands, the channel expands. So my friends, you just saw the example for the linear regression channel. I will now show you how the Kettler channel looks like.
1 month,
Yeah. Yes, Mr. Dagan.
there are two things I want you to do. Very
Yeah.
good. You showed us just take another random day and show us quickly.
Sure.
You do have time. And one more thing I want you to do, while you were doing the indicator below, you didn't talk about it. It was changing the color and it was also dynamic.
Right.
So that is what I want to show. I want people to watch both, how not only the replay, how the regression channel is developing, and also the one what is happening in the indicator below.
So I'll do one thing.
If you're going to talk about that indicator, I do not know, or somebody else is going to talk about it. I'm not sure.
Yeah.
So just one more example, please.
But should I just change the time frame to 3 minutes, or I leave it at 1 minute only?
You can, up to you. It will work both ways.
I'll probably put it at 3 minutes. Okay. 1 minute and change the time frame. Let's probably have a look at okay, this is a beautiful day. I guess quite some moment, 26th May. That's what we'll play. Okay. There you go, guys. Ready for the moment? Okay. So again, friends, if you have a look at it, the price came back to the mean from the start of the day.
And see the indicator below, it's changing the color.
Yeah. Yes.
It is shown, yeah. So, and that indicator, there's color value should be adjusted. I don't know who is going to do that, but if not, let's see. So as you can see that these are the way the trades can be taken where, on the top, you take a short trade, the bottom, it is respecting the channel. It's a purely probability model. Okay. Yeah. How long we have come through of the day?
Yeah, we are 12:30 right now. Just increase the speed once again.
See, it is.
Yeah, there you go. With a breakout, it came within the channel.
So the trend is changing towards,
Yes.
The slope. We need to watch the slope. And somebody is supposed to, Daniel is supposed to show that angle. I do not know. Maybe I will ask him to show it again.
So we've covered the day, Mr. Jagan. Should I just stop it, or you want?
Yeah, you can stop it.
Yeah,
Basically, one more point, Avinash.
Yeah.
You want to show how this can be done manually?
Yeah, sure. Sure.
That's the one point you might have forgotten.
Yeah.
Show that how you can draw at any point manually.
Yeah, sure. So basically, I'll just switch this off first to draw the channel. 1 second, please. To draw the regression channel, you've got to go onto the rail on the left side. The band that you see is called the rail. You've got to go to the trend line. From the trend line, you've got to pick up a regression channel here. Okay. And you've got to mark, say, for example, you pick up any point here. You pick up the top point here and the bottom point here, drop it, and the channel comes up on its own. Now, the basic difference between the two is this is a manually drawn channel and the other one is an indicator. So this is how you draw a channel here. Plus, if you want to go to the setting and change it, you don't want any extensions here, you could just remove this. So the extension goes off. Okay, and you could change the colors also from here. If you want just the top, you don't want the base, you just want the top part and the bottom part, yeah, you could do that as well. So this is how the regression channel is drawn on the chart. Now let's have a look at the Keltner's channel.
1 minute, Avinash. I will explain. You go to this indicator.
Okay.
Then, just I will show what can do.
Okay.
Because that's a visual. Just go to that indicator.
Yeah.
In the indicator, as if you are going to add it.
Okay.
Yeah. Correct. No, that's fine. Settings, yeah. Go to the settings.
Okay.
So that people understand. We'll not go very deep into it.
Yeah.
So what you can see, okay, leave the input values. We are not changing. Go to the style.
Yeah.
Yeah. So what would happen is the colors on that, you see the one below, and the green is a bullish trend, and the black is a neutral, and the one below the yellowish is the short trades, right? So it is also showing how the trend is happening in terms of the color. As it was moving dynamically, I do not know, people noticed it, and it can show you, help you, the red line, the blue line, and these 3 bands, right? Yeah. And then there is a break in the band. So this we don't have time to explain this particular indicator, but I'm sure in one of these sessions, or people can try themselves in the live market. It's very easy to understand. It is, apart from regression channel, this will also help you to see the trend, how the candles are moving based on these color settings, right? That one needs to observe. Is very difficult to explain here the way it is, but if you the line, the regression line, this particular, I can call it a histogram, right? So that should also be watched. See, the more this you can only experience when in the live market. It makes more sense. So I wish people could observe it from next week onwards. Go ahead, Avinash.
Sure. Thank you. Thank you, Mr. Jagan. So we'll have a look at the Keltler's channel now. Keltler's channel, again, you could just go to the indicators and type Keltner's, or you could just type KC here. Okay, you'll get the Keltler's channel here. You could add it to your favorites. That's what it is. And like I explained earlier, if you just have a look at it, this is the 20 moving average. The middle line that you're seeing here is a 20 moving average, and the upper and the lower band is basically nothing else but two variations, two deviations away from the mean, from the 20 moving average. And this is based on the true range. Unlike the linear regression channel that you saw, it had straight lines. Now, this is, since it's a moving average, you see wavy lines out here. And this tends to move out again. The more it moves out, it'll definitely come back to the 20 moving average. Let's have a look at probably take a replay on this again. I just love this feature from TradingView. Helps you understand the day if you've missed it. There you go, people. Again, it just came back to the 20 moving average, exponential moving average. It's staying very close to the moving average. Again, the moment it touched the lower band, it came back to the moving average. It's traveling along with it. It's also showing the trend. I mean, like, it's slowly moving down right now. Here it touched, it traveled on the lower band and then moved back again to the mean and up to touch the upper band. Like Mr. Jagan said, just observe the indicator also down below, how it's changing color and where it's moving.
So fine. One thing is, did you miss anything on your PowerPoint about customer channel, the formulas, or did you go through, did I miss it? In your PowerPoint, I thought you were saying something more about the formula or something like that. How?
But the formula was not, the formula was not mentioned, just the statistical definition basically.
You already completed it, is it?
Yeah, that's right. Yeah.
Okay, good.
Okay, so that's it from my end. Up next, we've got Renuka. I'll just stop this. Renuka, are you ready?
Yes, I'm ready.
Renuka is going to be talking about Andrew Pitchfork and Stark Band. So up to you, Renuka, now.
Yeah, I will share. Yeah, I will share my screen.
I'm so sorry, friends. I forgot to introduce Renuka. I'm so sorry. Renuka again is a new volunteer today. She volunteered to present, and she hails from Hyderabad. And Renuka is from the IT department, IT field basically. And she's again fairly new to trading. She started trading in October 2021, if I'm not mistaken, right? Renuka?
Yes, correct.
Yeah, Renuka.
Thanks for introducing me and given an opportunity to learn and explain this trading channels concepts now. Thanks, Jagan sir. I will start explaining this trading channel concepts. Now, we want to know about what is trading channel. Trading channels show traders' potential areas of support and resistance. May believe that within a channel, the price will either retrace or break out once it has reached. There are different types of trading channel, with the most popular being ascending, descending, horizontal, and enveloping. Each of these channels show different trends. Now we are going to explain different types of channels. Next is ascending channel. Ascending channel is formed by drawing two parallel lines in an uptrend. Means market is a bullish, then ascending channel will be formed. Here, and the next one is descending channel. In this channel also, when there is a trend is in downside, means bearish trend, then channel will form in downside. This is the descending channel. Then we are going to see the characteristics of ascending and descending channels. This is a characteristic of ascending and descending channels. Type 1, ascending channel is forming higher highs and higher lows. And the visual representation will be look like this. This is for descending channel where lower highs and the lower lows will be formed during downtrend. This is horizontal trend. In this trend, higher high and equal highs and lows will be there, and straight lines will be there, and price will move between these two lines. Next, we will go detail about trades. Here, when is it a good time to buy or sell using these channels? During rising trend, when prices are making overall higher highs and higher lows, it may be favorable to buy near the lower band. Pardon?
Go ahead. Go ahead.
Okay. Buy near the lower band means lower band and sell near the upper bands. During downtrend, it may be favorable to short near the upper band and cover at near the lower bands. Where bands are breached that higher or upper bands, then it indicates that trend will reverse. We have to identify that. Whenever it breaches that upper signal or upper band or lower band, then we have to get ready for the trend reversal. Next, we are going to check different types of envelopes here. Trends are used to draw envelope channels are statistically determined. Some of the most commonly used envelope channels are listed here. First one is regression channel and second one is a Kelter channel. These two channels were already detailedly explained by Avinash, and last one super trend channel also explained by Daniel. And now I am going to explain about Andrews pitchfork and Stoller average range channel bands. Is it clear till now? Then I am going to explain about Stark band strategy means here, as I told, Stoller average range channel bands. Here it is developed by Manning Stoller. Based on his name only, this acronym of that channel name came like Stoller average range channel. Stark is a simple form, we can call it as Stark. Is a type of technical indicator that is created by plotting two bands around a short-term simple moving average of an underlying asset price. Earlier, as per that Keltner channel, we used that exponential moving average, whereas here in this channel, we are using simple moving average of a specific time period. The next one is the upper band is created by adding a value of an ATR, average true range, and a downtrend will be created using by subtracting a value of the ATR from the SMA. Stark is an acronym for Stoller average range channels.
One moment, Renuka, just to interrupt. See, this ATR is coming back again and again. You saw it in Renko.
Yes.
So this average true range is it's a subject actually I wanted to talk about it this session, but perhaps it's not possible. And Nilesh was supposed to do that, but I think within the time we will postpone. We will have a separate presentation on some of them, particularly this ATR and how to set ATR, those kind of things, and what is its impact, how traders use this ATR, these kind of things that we will explain separately. For now, we will take ATR as given, and we will understand that it is a true range of the market from a particular point A to point B, okay, in terms of time. So go ahead, Renuka. Just I wanted to make sure that we are going to explain separately, more go deeply into the ATR concept. Or I will post one in the YouTube where you can go and check it up perhaps tomorrow, which will explain what is ATR and how to use that or how to set it up.
Okay. Here we will read that stock bands related information. In the stock bands also we have 3 lines. Here center line is a SMA of period 6. Then upper band is calculated based on the center line. We have used 3 parameters here. One is SMA and then one is ATR and another one is multiplier. So upper band will be calculated based on center line plus ATR into multiplier value. And lower band will be calculated based on the center line minus ATR into multiplier value. To expand that range, we will use this multiplier value. Similarly, we have average true range, also one of the parameter that will also be calculated based on 3 values here. Current high minus current low minus previous close, current high minus previous close, out of which it will take the maximum value of that average value of the 3 values. It will be calculated. So now I will give that sample trade, how to take the trades based on stock bands. This is the chart. So here we have 3 lines appear in this stock bands. The middle line is the SMA value 6 and the above one is calculated based on the calculations I have given above. Then this is the blue line is the upper band and red line is the lower band. Here in this chart, if you see, once that candle or price value reaches that lower band value, based on the conviction, we can take that long trades here. See here.
Renuka, sorry to interrupt. If you could just go full screen mode, please.
Full screen mode.
Yeah. Down below on bottom right.
This one?
No, a little bit to the left, next to the slider. Yeah, this one. Exactly. Yeah. Thank you so much, Renuka.
No problem. Thank you. So here, once this RSI line touches that oversold area, and also it is started going up, where this line also touches that lower band value. So we can take long portions here, and it started rising from here to up to this value. It also touches that upper bound value, but we can wait till this candle also, because here it is in overbought area now. Based on that values and indicator, we can take the decisions whether we can stay in the trade or we can exit from the trade. Here it started going down, so we can exit from this candle or next candle also. Okay, I will show next slide. This is the short trade. Short trade also, once the candle reaches that upper band value, then we can take the previous candle also, because it formed below that upper band value. So if you take the trade here, then we can wait till that RSI value start going up. Here we can exit from the trade based on this indicator. After some time it is again started going down. Either we can re-enter here based on the other indicator convictions. So this is what stock related channel long and short trades. Later point of time, I will show the trades in TV also. Next, we are going to discuss about Andrews Pitchfork channel. Andrews Pitchfork channel. This is also Art of Pitchfork is a tool that aims to identify possible support and resistance levels and forecast the future price movement based on the previous trends. Unlike other channels, it will predict that future price movement also. And Andrews Pitchfork consists of a median line at center and 2 parallel equivalent trend lines, where outside trend lines represent area of support and resistance for the trend. Traders often look for buy or sell opportunities as the price approaches the end of the channels, means the upper or lower bands. It approaches to upper or lower bands. Based on that, we will take buy or short, go for short. Next, this the channel also supports for all time frames. Next, this one, the basic idea behind the use of a pitchfork is that it essentially creates a type of trend channel. A trend is considered as active as long as price stays within the pitchfork channel. If price is moving within that channel, then it is in trend only. If price moves beyond that pitchfork channels, then there is a chance of reversal of the trend. The pitchfork pitchfork has a center median line, trend line, as well as two more sets of lines above and below that median line. The additional lines are set as a specified number of standard deviations away from the median. Here, this auto pitchfork will look like this. This channel also will change dynamically when price moves with the different values. These lines will move automatically while trend is moving to different directions. So now I will show you that trading view, how it appears in that trading view. This is a star channel related indicator. I will explain how to add that indicator in our trading. This is a Stoller average range channel, start bands. We have to mark it as a favorites and then you can use it. Stoller average range channel is the indicator name. Then you can go to settings for that star.
Monica, you go there. Sorry to interrupt. Go to the indicator. You have to show also if they want to know where to read. I want to show. Go
Okay,
to
sir.
the indicator.
Okay, sir.
Yeah, just type stroller, it will come. Yeah, you see the right hand corner. Can you
Yes.
open the right hand after the bracket? There is one.
Yes,
Yeah.
this one,
Can you
sir.
press it? So what will happen? It will show you what it is about the formula if you really want to know. Not only for this indicator, any indicator it will show you. I think your internet is not fast. It's not coming. So basically the script will be shown. These are open script. You can copy the script and you can put it in another chart. Why it's not coming? So, okay.
Script is here, sir. We can copy and paste this script also, sir. We can use
Yes,
this one.
that's what I want to say. Yes.
Yeah.
And also it will, all the assumptions, the write-up, whoever did this, develop this indicator, it will write, which is not showing because it's hanging around. Right, Renuka?
Yes, yes, sir.
So, but I just want to show it, that's enough. You have only 5 minutes more. So
Okay.
you have to finish this. But please, this is the way you go and understand if you want to know about the material. And if you want to copy the script, it is below the way Renuka will show. Then,
Here, this is the Pine script.
Yeah.
We have to copy the script. Once you copy it, here we have an option for a Pine script editor. Here we can go and paste that script. It will automatically load that.
yeah, that's another way of doing. So yeah, go back to your presentation, Renuka.
Okay. Okay, sir.
Just show us examples of example yesterday, last week, what happened.
Here also, this is the 3rd June around 12:22. Here it that price action reached that upper band and then it started come down. Then we can wait up to this. Still it breaks down. Then we can see that this indicator also, other indicator, where it is not reverting, so it is going down only. So you can still stay in the trend. Then we can wait up to here. Once it go up, then we can take the decisions. Whether we can stay in the trend or we can exit from that. Here divergence also happening here. See, it indicates that divergence here. So we can exit from this candle, either a previous candle, so we can exit from the trade. If you want to measure that how many points we can capture here. Around 180, 170 points are there. And I will show another example. Here also it touched and it started come down up to this. We can take the exit from the trade here. Because here, if you see here, it is in overbought area now, based on this RSI indicator. Then we can exit here because it came into a green area and also it started going up, this indicator. Trend is reversing here. So we can exit from the trade here, or if we exit here, we will lose some points. And somewhere very good trade is here. Here also it touched at upper band. After that it started falling down, and it is moving around that a center line only. Up to this, here it again touched here. Then here divergence happening. RSI divergence is showing here, and trend is moving upwards. So we can exit from here. Here momentum is very big here in this 1st of January. If you check here already we are in oversold area in this candle itself here. But we have to wait and take the trades once the price action moves inside that lower band value. And then we have to take this long here. Once we enter the trade, then we can wait. Here it is beyond that upper band value, even though it is going up, moving upwards only.
Renika, you have to stop here. We are out of time. Do you have anything else to say?
I wanted to show that pitchfork related channels are by playing that.
No, actually, you don't have time.
Okay.
You should have done it because you are spending so much time on. We understand these things. Look, there are also 2-3 questions which we have to answer, and Nilesh is coming. How long is it going to take you to show that pitchfork thing? Replay. Can you just go and 2 minutes finish it off? Then I want to take the questions and move to Nilesh, please.
Okay, sir. Here I will just play in one of the direction. It won't take much time. Just one simple. Here I will start. This channel will change dynamically when price moves. Whenever it is beyond that value, it is start reversing that trend.
Okay, you are showing that it's reversed.
Yeah. Shall I stop it?
Yeah, please stop this. Thank you very much, Renika.
Thank you, sir. Stop sharing.
Thanks, Renuka. Thanks, Atani.
Yeah, just 2 questions I want to take it up, answer, Avinash. One was to you. about this, if the channels keep, because it's a basic question I want to answer from Saurabh. If the keeps on changing the what do you call the regression channel, then how do we trade? Okay, because we won't have the. Actually, it is opposite. It helps you to trade because it will show you the trend, and it is not that every minute the trend is going to change. Let us assume between, let's say, the trend is there for 1 hour, 1.5 hours, 2 hours. So that channel will stay, and you will be able to trade during the 2 hours, 3 hours. For example, last Friday, it was a downtrend. So if you look at that channel, it will show you that complete downtrend, and you'll be taking, and you can take many trades, short and long trade confidently. So that's one thing. So it's not that because it's dynamic, every moment is going to change up and down. No, most of the regression channels will stay because it is moving between the standard deviation. The other question is about confluence is yes. See, the confluence is it's not about one indicator or two indicators, same sort of question. It is about what is the relevant indicator, which, I think in the other Sanadip's presentation, he explained clearly. So if if you are trading based on a volume strategy or a volatility strategy, so these indicators are different. So you must use, if you're a trend trader, you look for confluence in the trend indicators or momentum indicators. If you are a volume trader, then that's why we are using different indicators. It won't work. If you are range trading, then yes, Willy will be the very good indicator because it will move. But if you are trading in, let's say, on a trend, Bollinger Band is not a good thing because it's based on standard deviation, it's based on mean reversion. Whereas if the trend is very strong, it is unidirectional, then you have to look at other things like super trend or Renko and those kind of things. So it's all based on the context. There is no rule that you should look at one indicator or two indicators or three indicators. But of course, too many indicators is also not good. So that is why all our charts will have only three indicators maximum. So we don't exceed that because too much indicators also we get confusion or it's very difficult to make quick trades. So normally we look at three indicators confluence, right? And which indicator depending on what strategy you are using and what is in the body chart. Thank you. Let's move on, Avinash, to next thing.
Thank you. Thanks so much, Renuka. Up next, I did not say who's up next. You can make it out from the second item on the list here, Bollinger Bands. We got Nilesh, BBB. He's going to be talking about Don-Chan, Bollinger Bands, and Fibonacci retracement. Up to you, Nilesh, now.
Thank you, Avinash. I'll be talking about a Don-Chan channel, Bollinger Bands, and Fibonacci retracement channels. This is related to the entire channel thing. I'll start with Don-Chan channel first. Before we start, I would like to tell you about this guy named as Richard Don-Chan. This guy roughly about traded for 65 to 70 years of his life. He couldn't make profit for about 40 years, and then after 40 years he got successful, and he's the first guy who started managing funds, something like mutual funds, which we see. He was the first one to do it. He came up with this theory. He used to check lower high and higher highs of the last 4 weeks. This is how he came up with this 20 period moving average, which calculates the 20 days. In a week for traders, we have 5 days. So that is how the 4 weeks came to 20 period moving averages. Now, this indicator is formed by upper and lower bands and a median, like you have seen in Keltner's channels and mean regression. So what the difference between them and this Don-Chan channel is, the mean here is 20 period moving average, like we had it in Keltner's channel, and the upper band are further 20 period, and lower band is further 20 period low from the mean standard deviation, mean from the mean. Okay, as you can see here, Donchian channel is used for trading breakouts and trading with the middle band. See, this is applicable to everything. As in all the channels we have seen, you can trade using mean reversion strategy, or you can trade breakouts. I'll show you how. I'll just explain the PDF first quickly because we have less time, and then we'll go to the trading view chart and I'll show you. Now, as a breakout indicator, what we will do is here. Can you see my screen? Uh, as the channel expands, can you see this portion?
Yes.
This is the latest chart. As the price goes down, this channel will expand, and this is how you will take a trade here at this point, which indicates it is going down, and you can just ride along the trend. This is how you and this is the first candle which closes inside the band. You can exit here, and then your next trade will be here at the mean, and then also again you can write the trend and exit here, and then again, but you will not exit here because we are using confluence. This is if you're only using the Donchian channel, no other indicators, you'll exit here. The first inside, you will be very careful about candles which close inside the channel. Now trading with the middle band, as you can see here, if the market is range bound, for example, I'll show it in the chart. For example, let's consider this period. Here the market was range bound. What you will do is the lower band, you'll take an entry signal, you'll take a buy signal, and you'll keep this median as your first target, and you will exit half of your entries, and then but since we are using a confluence, you'll ride along it, and you'll exit at the second band, upper band. Same with the reverse trade. If you take a sell signal, this will be your first target, this will be your second target, and you'll exit here completely. One more thing, if the price is below the median, it is a sell signal. If it is you'll only consider taking a sell signal. If it is above the median, you'll only consider taking a buy signal. Now the key takeaway is Donchian channel are technical indicators, seeks to identify bullish and bearish extremes that favor reversals. See, bullish and bearish extremes, like I mentioned here. Here it is bearish extreme, so we are here. There will be a reversal. The price will go. This is the latest chart, by the way. And here the bearish extreme will take a reverse trade. This indicates a reversal, and there. If you there will also be a concept of mean reversion. Like I said, see, if it goes to the extreme, it will revert to the mean. Here again, it reverted to the mean. I'll come back to the trading view chart. I'll just explain this shortly here. Now, I'll move to Bollinger Bands. I'll explain the difference. I've already done 2 videos, roughly about 3 videos on Bollinger Bands.
1 minute.
Yes, sir.
You will have your 15 minutes. You don't worry about it. So, maximum 10:05 we will close.
Okay, sir. Yes, sir.
So, just whatever I know you are prepared well. So, I don't want to cut your time. So, we'll close at 10:05.
Okay, sir. Now, Bollinger Bands, I've done multiple videos on this. Like I've literally done 3 videos, 2 explaining the 20 and 30 period moving average, and the other one I've done is for explaining rank delta. Now, why we use Bollinger Band is these are very similar. Bollinger Bands and Donchian channel are very similar. I will explain the difference, but I will quickly go over this. Bollinger Band was created in 1980s, and it is used across various things. Like you can use for stock, futures, currency, cryptos. It will tell you about the what the price is compared to the mean. As in, if it is at the upper band, it will be a high, and if it is at the lower band, it will be relatively low to the mean. What Bollinger Band does is it will give you an insight about the price and volatility. It will tell you about oversold territory. It will tell about trend. Now, in a trend, you will follow the band walking strategy. It will help you monitoring breakout. That will be after a squeeze. After the squeeze, I have mentioned this in my previous videos. You can watch them. And one more thing about Bollinger Band is you can use it across multiple time frames. For example, 1 minute, 5 minute, 15, hourly, weekly, monthly. Now, see, this is the squeeze. Now, I'll explain this thing like price and overbought and oversold territories. Now, whenever the price is at the upper extreme, here it is at the overbought level. Whenever it is at the lower extreme, you will see it will be at the oversold region, and there will be a reversals. For example, you can see this is 2 standard deviation. Now this portion, whenever there is a breakout and the price starts consolidating, this period is known as pinch. And then here, this portion where the price is just hovering around 4 standard deviation and there's nothing major happening. You can see it is the entire band has shrunk into a very narrow zone. So this period is known as squeeze. We shouldn't take a any trade when there is a squeeze. Now, one thing about squeeze is whenever you see a squeeze, there will always be a breakout. For example, here it tried to break out, but then again, for example, even here there was a squeeze and then it gave a breakout. Now,
but the longer the squeeze, the bigger
the longer the
breakout.
squeeze, the bigger the breakout. Yes, squeeze indicates that there will be a breakout in future. So you have to keep on watching the the period between 11 and 1, or maybe on Wednesday. This concept keeps happening on Wednesday. They will try to hit your stop losses. Now, see, I mentioned trend. Now monitoring breakouts. And now, what is the difference between a Donchian channel and Bollinger Bands? See, Donchian channel uses 20 period moving averages. And what Bollinger Band does is it uses 20 period moving averages as in and it also uses standard deviation. So what the upper band of Donchian channel is 20 period moving averages plus into 2, and the lower is 20 period moving average into minus into 2. And the median is upper band plus lower band divided by 2. And when it comes to Bollinger Band, the calculation is a bit tricky. It is 20 period moving averages plus 2 standard deviation that into 2. That is how the calculation goes. This is the basic difference between them. What Bollinger Band does is it uses probability more, and what Donchian channel does is it just uses the previous 20 days candles. That is the reason that this is the limitation of Donchian channel. This is what happens is Bollinger Band gives us much more good results when compared to Donchian channel, because we are using standard deviation, we are using the probability in it. Now, so should I go to the trading examples, or should I go to Fibonacci first?
No, you go to the two quick examples. We have exactly 7 minutes more.
Okay, sir. So I'll go to trading with examples. Now, first I'll go to Donchian channels. I'll just expand the screen. Here. Now, why we are using RSI? You will say like Nilesh uses RSI in every charts. See, the reason we are using RSI when we are combining it with channels is because there are upper oversold and overbought regions. Even in RSI, stochastic, MACD, you will see this thing happening, like oversold and overbought regions. I've explained the concept of 40-60 before while using while explaining Bollinger Bands first. Now I'll just go shortly over this indicator. See, you see this greenish zone. This is known as whenever the RSI is between 40 and 60, you will see the market is very sideways. For example, here, you don't even have to look at the chart. You just look at the RSI. Now I'll just expand it. See, during this period, it is a sideways market, and then it gave a breakout. Now here you can see it was a sideways market, and then it gave a breakout on the downside. Now, talking about Donchian channel, see how to you can go to indicators and you can just type Donchian channel and mark it as favorite and use it. But now what we are doing here is, see, if you want the data of last 50 days, you can change the length to 50. If you want 52 days, you can change to 50. If you want to use 30 days, the data of last 30 to be more precise, you can use that. But we are using 20 as a standard. Now, trading channels. Okay. See, whenever you're trading channel, it becomes very easy when you're trading channel. What happens is your lower extremes become, for example, I'll take a consolidated region. Just 1 minute. Yeah, this is a breakout, typical breakout.
Nilesh, if you could just spread it a little bit.
1 minute, I'm doing it.
Yeah, this is clear. Thank you so much. See, you could have even traded the range bound market. Whenever the band touches the lower extreme, now you'll be like, Nilesh, it touched here at 1038.
but it again went down. See, this is the band is expanding. Donchian channel is expanding, giving a hint that you'll have to ride along the trend. Here you could have taken a trade based on the confluence of RSI and other indicators, and you could have just ride along the trend. Now here you will wait for a reversal. Now you will wait for a candle that closes inside, probably this one, and you will take an entry here, and you'll ride along the trend. The lower extreme of the band will become your stop loss because it won't cross it. And then this could be your first target, and this will be your second target. Now we won't take here because RSI is giving us a signal that it is moving along. So this will be your target. You will exit all your entries here. This is how you will trade every channel that were mentioned here. KC, be it a linear regression, be it or the Bollinger Bands. Now, what happens during the breakout is it couldn't go up. See, it is trying to go up. It's not going up. I'll just expand the. Yes. See, here it is trying to break out. It is trying to break the mean, but it is not. That is a clear indication that the upward stream is done. It might fall down. So you'll wait. It is stretching the low band, and when you see the band, the Donchian channel expanding, you'll take a trade here, and you'll just ride along the trend, and then you'll exit here. This candle, the one that closes inside, you'll exit here. Again, depending on the signal of RSI and depending on the strength, you can take a long signal here. You could exit here. This will be your first target. This will again be your second target. See, you.
This will be about 400 points, right?
Yes, sir. Roughly, I'll just calculate and show it to you, but I'll just continue with the example first. So here again, see, it touched the upper extreme, and then you should take a reverse trade here. Reverse as in a sell trade here. First target, second target, exit. Now, even here, it touched the upper extreme and then it went down, but you will take a trade here. You'll ride along and exit here. Since we know that day crypto just got destroyed, we know the market might fall. Again, see this, you can take, this is a short period where the market is range bound. So here you could have taken a reverse trade, long trade, exited here, or you might have ride along till it touched actually here. It touched the second upper band. Again, see, this was a massive, just 1 minute. Now it touched here, so you know for a fact that it might reverse, but you will just it actually reversed and touched the mean. Your first target is done, but again it might have hit your stop loss if you have stayed too long, or again you could have taken a trade and see, you could have ride along the band and exited here, the first candle which closes inside. You could have taken a reverse trade here, but we don't recommend you to take a trade in the opposite side of the direction. What happens when you take the trade in opposite side of the direction is it reverses from the mean. For example, it did here. See, it came down again. It touched the mean. You could one thing you can do is when you're taking a trade on while the market is trending, you can take the trade here and you could exit here, and again you could have taken trade here and again exit here. Any whenever the market is trending, whenever it touches the mean, it gives us a buying opportunity that you can re-enter the trade.
Thank you, Nilesh. I think it's enough examples.
Now,
you have anything to just 1 minute about this Fibonacci?
1 minute, sir. I have explained Bollinger Bands. I'll just go to Fibonacci 1 minute. See, Fibonacci, this is the best thing about mathematics. I'm not going to explain the concept because we have limited time again. But what is Fibonacci? I'll just explain it shortly, and then I'll show you why this percentage, how this percentage come. See, basically Fibonacci is repeating numbers, and if you 0 1, now if you 0 1, then 1 plus 1 is 2, then 1 plus 2 is 3, 3 plus 2 is 5, 5 plus 3 is 8, and 18 plus 13 is 21. Now, how this ratio comes is there's something called as golden ratio, that is 1.618, or when you divide 8 by 5, and if you divide 5 by 8, that is 0.61. So what whenever you divide 8 by 13, you'll get the number 61.8 percentage, and whenever you divide by skipping one number, For example, I'm skipping here. If you divide 8 by 21, you will get 0.382. If you skip another two numbers, if you divide 8 by 34, you will get this number for 28.2. See, I mentioned this clearly here. 23.6, 38.2, and you can just keep on going out. Whenever we use Fibonacci retracement, you'll see this 50% and 100%. These are not Fibonacci numbers, but we added to see what the levels it has fallen. Now this Fibonacci was invented by Indian people, but this guy Fibonacci, this guy Leonardo Pisano, what he did is he came to India, he learned about it, and he reintroduced again. This is how it got popular, and you will find Fibonacci everywhere. I don't think I'm doing justice to this by doing it very shortly, but you'll see it everywhere. What Fibonacci does is it shows you support and resistance level, like auto pitch and fork did. But what auto pitch and fork did was it showed you in terms of price. But what Fibonacci is doing is it is showing you in terms of percentages. Now you can see here, market is obeying the Fibonacci. How to draw Fibonacci? You take the lower point in your chart and you take the higher point in the chart from where you want to watch it, and you will just see the magic of this. Now this is how this is just an example of retracement. Here it retraced from 0%, then it went up, and then again this levels can act as support and resistance levels. I'll come to the latest chart. See, this is the latest chart. This is for the entire day, and you can see how the Fibonacci retracement worked. This is the 3-minute time frame. The one chart this is a chart I've used for Bollinger for DC, and now I'm using for Fibonacci. Here it reversed from it offered support, it went down. Here it again gave a resistance, it came back again. Here it tried to move up, but then there was a resistance, it came down, and it came down massively. And from here, the 100% level, it again bounced back, and there was a resistance again. See this thing, reversal. Can you see this chart? So whenever it crosses from see, if a trend is going up, and if it retraces and it crosses from 38.2%, there will be a strong trend. Crosses from 50%, there will be a normal trend. 68, if it goes down to 68%, it is basically a weak trend. And if it reverses, it goes down to 100%, there will be a reversal signal, and it is a very weak trend. Any questions, please? Just ask.
Sorry, we don't have time for questions. Avinash, can you do the closing ceremony?
Yeah, sure. Thanks a ton, Nilesh. There were quite a few questions, but yeah, I think we'll just put it up in the group, and Nilesh, you could answer them.
Okay, I'll do that.
Thanks so much, people. And before we close, just a sweet reminder that you've got to sign up the Google Forms to get access to YouTube channel. And please like, share, and just forward the video channels, and let us get some traction there. Thank you so much. We're looking forward to week 10 now, which we'll announce and put it up on the group. Thank you so much, Mr. Jagan. Thanks, people. Thanks, Nilesh, Renuka, Sanadeep, Daniel, everybody. Thank you so much. Good night and happy weekend.